Hello. Today is Tuesday, June 9th, 2026. Here is your daily signal. According to Bloomberg, gold prices recorded their most significant drop in 2 months after robust U.S. jobs data fueled expectations of a Federal Reserve rate hike, sending shockwaves through both commodity and bond markets. Each month, the U.S. releases critical jobs numbers that sway global financial sentiment, and in June 2026, the economy added 172,000 non-farm payroll jobs for May, well above consensus forecasts, a strength seen as pivotal to Fed policy. As of June 5, traders had fully priced in at least one Fed rate hike this year, which sent two-year Treasury yields soaring to 4.17%, marking the steepest daily rise since April 2025. Meanwhile, Brent crude oil prices fell 10.7%, U.S. natural gas surged 6.1%, and energy prices are expected to climb 24% for the year. The immediate effect has been a stronger dollar and a global bond sell-off, raising yields and denting equity multiples. Persistent strength in U.S. employment, especially with sticky inflation, could push the Fed to tighten further, lowering rate-sensitive commodities and emerging market assets. Medium term, the volatility in commodity prices may ripple through inflation, corporate earnings, and global growth, particularly amid ongoing geopolitical disruptions. Next, onto the technology sector. Fortune reports that the world's major tech stocks suffered their worst day since October, with Nvidia falling 6.2%, Broadcom dropping 7.9%, and Micron Technology sliding 13.3%, driving a broader sell-off that erased over $1 trillion in market value. The downturn followed a period of spectacular gains. The sector had rallied nearly 80% earlier this year, but concerns mounted after Broadcom's June 3 earnings report, where AI chip revenue guidance for Q3 fell short of lofty analyst expectations. Rising inflation worries, the prospect of Fed rate hikes, and geopolitical tensions including Middle East conflicts impacting energy pricing have fueled volatility across the US, European, and Asian tech markets. On June 5, Europe's Stoxx 600 tech index fell 2.8%, Infineon Technologies dropped 9.1%, and ASML was down 2.4% as the US and Asia tech rout spilled over. Broadcom's Q2 revenue hit $22.19 billion, but its Q3 guidance at $16 billion was $1.2 billion below market consensus, triggering mass liquidation. The Nasdaq fell 4.2%, S&P 500 by 2.7%. In the near term, analysts expect continued volatility as investors digest earnings guidance shortfalls and reconsider forward expectations. If inflationary and geopolitical risks persist, global indices may stay pressured, slowing tech investment and sector fund inflows. Longer term, semiconductor valuations could compress until fundamentals or macro signals stabilize, potentially leading investors to rotate away from high multiple tech assets toward defensive sectors. Now, we turn to a technical case study in mobile AI. Hacker News highlights Zedra's launch of a mobile control plane to remotely orchestrate AI coding agents, marking a significant advance in distributed mobile systems. Mobile control planes allow real-time coordination and resource management of AI agents across devices, but the transition poses technical challenges like adaptive security and seamless resource allocation, plus heightened risks around authentication, privacy, and resistance to mobile-specific network attacks. Since May 2024, Zedra has spearheaded secure agent integration and, on June 9, it announced successful deployment. SentinelOne, in partnership with Zedra, published a security audit confirming robust authentication protocols. MIT Media Lab released an analysis of Zedra's data privacy mechanisms. Industry-wide adoption could follow as early as Q4 2026, with improved security potentially boosting enterprise trust, especially for regulated sectors. However, rapid uptick may strain mobile infrastructure, spotlighting interoperability gaps, and medium-term, this could drive new standards for mobile control planes and shape telecom and AI regulatory policy. Now, onto the markets. In international markets, France shares rallied, with EWQ up nearly 0.7% day over day, while Italy saw a 1.5% jump and EWI leading gains among peers. Germany's EWG slipped slightly despite recent strength, and Japan's EWJ dropped over 1% for the session. Commodities mostly weaken. Gold prices dropped about 1.6% to $390.78. Silver fell over 4%, while lithium surged nearly 2% and LIT emerged as a rare gainer. Favorites showed notable declines, with ARM plunging 6% and Adobe dropping almost 3%, while Low gained by more than 4% and was the top gainer in this group. The S&P 500 SPY slipped by 0.3% as Nvidia and Microsoft posted modest losses, with Marvell down the most in the sector at 7.6%. Healthcare led sector advances, Roman 45 up 1.3%, supported by strong momentum, while clean energy declined by over 2%. Among individual movers, CCSC Technology International Holdings CCTG soared 194%, while SmartChem SMTK fell more than 57%, marking the largest gain and loss respectively on the day. That's it for today. You can find more news and details on our website. Goodbye.